Hi and welcome to the Market Alert for Thursday, the 7th of January 2020. So a lot to get through this morning, so it's going to be fast paced as a huge amount of stuff happening yesterday. But the end of the financial day, the big tech stocks and bonds battered, but Bitcoin bid on blue wave. Obviously the Democrat news, which we'll come to shortly. Gold pumped and dumped. Well, don't worry about that. That's another buying opportunity for when it returns back to the upside when Biden gets in. Bring it on. I can't wait. This is bad in so many ways that people don't yet realize. America's second civil war has now officially begun. And oddly enough, this was written before the Capitol building was stormed by the Trump supporters. So interesting that this was ahead of the curve. So, let's have a look at other few items as well. And the reason I'm saying, I've said a long time about the Brexit deal and whatever. That didn't really cause too much of an issue in the market as yet. But this man, Hank Paulson, oh my God, I can't believe the Biden lineup is the same as Obama's. You know, we've got Yellen returning, and now they're getting this man back. This man is an absolute bloody crook. He was head of Goldman Sachs in 2008. He was then taken on by Bush, and he was the one who printed the first $800 billion. He said the banks would go bust and et cetera, et cetera. He left Goldman Sachs with a $750 million bonus and never paid a single penny of tax. This man is the epitome of a huckster and crook. And he's coming back into the Democrat government. It's like Obama version 2.0. It's just incredible. So something else to look out for. So it's going to get messy as we go forward. You know, the Republicans aren't going to accept this. The Republican voters, and that's why it's going to get messy. And that's why saying here about the Civil War, there's no doubt that that's en route. You can see that now from what happened overnight in the US. And then to add to the misery, the stock market might be going up at the moment and making all-time highs, but now we're locked up until the 31st of March with the odd review here and there. Whether there's actually a Commons vote on any changes, who knows? It just gets bloody worse with regards to making these mandates. But that's what it is, 31st of March. So the impact on the economy from this is going to be unprecedented, and we're going to see the same February-March crash that we saw last year. How can we not, unless this man, along with Yellen, just keep printing and printing and printing, and I suspect that they will, and you'll see this as we go into the Market Alert in more detail in part 2 as well. So the implied volatility picking up a bit yesterday, even though the market made a new all-time high, up at 2015, and we are amber in the coloured version. So we're starting to see now that the options traders are getting a bit nervous and a bit tetchy here and marking up the risk that is in the option premiums. News today, let's have a look at that whilst we're here. We've got unemployment claims in the US. This is forecast to tick up. And we've got services PMI as well, that out at 3 p.m, 1:30 before the Dow opens, 1 hour to be precise. So let's have a look, see where we are overnight. Starting with the DAX daily, we can see that we've taken out the all-time high. We did this yesterday. You'll see that in part 2 in detail. And price is now free to move to the upside. And they're going to, aren't they? Biden is inaugurated on the 20th of January. And prior to this, they're going to just keep pumping this market to the upside. And then once he's in, then the party will start. As we saw the other day, the last year's correction in the market was a snack compared to the full-blown 3-course lunch that will be coming in the not-too-distant future. So at the moment, even the Capitol Hill being stormed hasn't stopped the market from going up. It had a bit of a blip, but it continued to the upside and continues now. You can see here, we've got the DP down here, we've got the 200 MA, and we're already through yesterday's high, which we've just seen in the daily chart. All of the averages are pointing to the upside at this point. It depends what happens in the futures market, but you can see that prices even gapped on the overnight, jumping above the all-time high. This is what this black line is. You'll see that in part 2, why that's in the chart there. I'll just drag this over. You'll see the line there. It was the all-time high from this one here, the high of this bar. Just get rid of that and draw this one. It was this all-time high, which I'd used yesterday just to see where the market was going to move high. Actually, sorry, it is actually the other bar because it hadn't done it yesterday. I'm looking at it retrospectively. So it was this the high of this bar that the black line represents there. Just left it on the chart. But you can see as they came back down to it, they bought back into it and moved the market back to the upside. Like I said yesterday, you could always expect to shake out on the open and then reverse the market to the upside. And in the Dow as well, if we have a look here, find the daily chart, here it is. You will see yesterday driving higher. It was just relentless yesterday. Even in the 1 minute chart, prices just kept moving to the upside, which I'll give you a quick glimpse of in just a second. So there you can see now 31,000. It never stops, does it? 31,000 to the upside. I mean, how overvalued these stocks must be. It is beyond the calculator, I would imagine, but it's being driven, and that's it. In fact, let's have a look at a 5 minute chart and scroll this back. There you go. You can see from the open it was just relentless, never closing back below the 5 bar moving average until 4:30ish for the Dow, and then of course the storm on Capitol Hill brought the market back, but of course they've managed to drag it all the way back to the all-time high as well. So there you can see now, just about to go through the high. Go back to the 5 minute and just narrow this, and you'll see there it is sitting waiting to be taken out. 31,030 points is there. So 32,000, well, who knows? 50,000, again, who knows? Now Paulson, Yellen are back on the team. Anything could happen as far as printing money is concerned for the bunch that are coming into the White House. But it's going to be an interesting 4 years. It's not going to be pleasant either. Okay, I think that takes care of part one with what's going on. Like I say, we're already above the high in the DAX, so we could get a shakeout at the start, or we're just going to simply just keep driving to the upside to suck people in and then bring the market back. But there's a lot of uncertainty obviously looming at the moment with what's going on in the US, even though everything is back under control. Nonetheless, an interesting 24 hours to say the least. Okay, let's have a look, see what the market did yesterday. Okay, so the market starts off with a correction and moves lower, well, shakeout or correction. You can see the market giving back everything that it had made in the futures market and trading down to the DP. And if we fast forward through this, you'll see some short covering there, profit taking as those that were short taking profits, and then the selling resuming as prices then trade sideways to low. And you can see the selling there as prices then go through the BRN and continue to move lower. So there you'll see the selling back to the BRN, prices below the 5 bar moving average, now below the close and the 200, but finding support at the DP level there. And you can see the buying pressure there because you've got a narrower bar with the range of the previous bar far greater and at the DP level. But a break below the DP level with new selling will send the market lower, but here you see them bring it back at the BRN, bit more profit taking there. Price is still below the 5 bar moving average and the DP and the 200 MA, and then a close below the BRN there. You can see prices then starting to find some support, and you can see them testing here. So what happened here was there was profit taking trying to bring the market back, and there was obviously too much selling around. So what they've done is said, okay, let's shake out to the downside. They shake out to the downside, then the market finds its support, and it is then brought back. And you can see there price is sitting above the BRN, then we get a close back above the 200, and then we've got the DP there. The market now trading sideways, and then again you'll see we've got a potential buy signal with an interesting bar because we've got some selling here and closing back below the 200 MA. But the donkey work of shaking people out was done earlier on in the session. We want the market up, keep the market going up, and that's what they aim to do. Here we've got a short that was filled. I'll just wind this back a bit, and as soon as I could, I got the stop to break even, because we've already had the shakeout to the downside. I also drew in some fibs just to see where the market would trade to, and you'll see it came back straight away to 62% there. 78%, went down to 78, and then came back to 62. And as soon as it did this, and I'm watching the volume, you can see they just drove the market back and taken out a break even. The market then traded sideways, and then we had a potential long followed by another potential short, and of course the other one had already failed at this level, which was 78% of there. And it's a case of will the market move lower, and it doesn't. We see them buy back in immediately, which again you can see from this low to this high is down at 78% retracement, which isn't drawn on the chart there. And then prices start to move back, and we then see we got a potential buy signal. And this is an absolute pain when this happens, but it is what it is. So hopefully we're going to move to the upside, which we do. So that takes out the short side, and then we get this huge bar. And the reason for this, I'll show you exactly what happened here, is that China finds 63 cases, COVID cases, but the important bit is this bit here, this subtle headline that was thrown into the market, and we saw the Moderna vaccination actually approved, and that's what this is. The DAX reacting to this, so it takes out the short side, and then the market is free to move to the upside, and nothing you could do about this apart from re-enter where the market is closed above where it would have done normally with this fresh buying, and then it drives prices. But then we've got resistance at the close, at the resistance to the left as well, but prices finding support at the DP. The DP, crucial area, as you know. You want prices above the DP, above the 200 MA, and then they start to drive prices to the upside until we get some profit taking here, some potential weakness. Prices come back to the 5 bar, close below the 5 bar twice, 3 times, still potential weakness. But you'll see the market's making rising lows. So even though there's potential weakness, nobody wants to bid lower. And then prices, again, stuck in this sideways range as we get towards the end of the morning session, and they just shunt prices back up to the high across here that you can see with low volume, just the market makers at work, and then eventually they can bit more buying to drive through. And here I'm having a look at the daily chart to see where we are. We're currently at just 50%, but by the end of the day we would be making a new all-time high. If only we had 20/20 vision to actually see this beforehand, that we're going to get that sort of move. But yeah, you can see their prices then trading up to the BRN. You've got a lot of volume in this bar, so there is some profit taking at this level, and then prices trading sideways there. And then it's on to the afternoon session. Well, before this happens, we've got the ADP unemployment figures. They're released around here somewhere. I might just have a look. I'll show you the graphic that went with this. Just here. These came out worse than forecast. In fact, there's your February, March, and there's your April, and December is actually a negative, and not had this since last year. So again, this adds weight to what we're talking about earlier with Biden's administration. So the market reacted negatively, but soon pulled back. You can see prices coming off the low at the previous day's high. You want to keep prices above the high, as I've said many times before. And then we see the market waiting. Bailey spoke at 2 p.m. and then we get into the session. I don't know what Bailey said, but they marked prices down. And then eventually we open for the afternoon session, which I'm just going to wind up here. So what's happened here is immediately the market's open and it's gone above the 200 bar moving average, the 20 bar moving average, with huge buying, and also the BRN as well. We've got the high here, we've got the R1 here as well. So as the market did this, I decided to buy, and we've got further buying here as well. There was a lot of volatility, so I bought at this price, having to make up those two losses earlier on in the morning, and the market then continued to move to the upside, closing above the 5-bar moving average, and then I got out at this point, which seems rather silly, but the reason being is that they were having the count in Georgia, and it could have gone either way to begin with, and so I had to make a decision on, okay, well, I'll take the profits off the table. There were 60 odd points profit, and here you go. There's here are the full blue wave implications for politics and the economy. So now I was switching back. You'll see this a bit later in the video, switching back to see if we could get some sort of results. They were imminent. And if Trump had got in, then the market could have just dropped 1,000 points on the Dow in one go. So I thought, no, I'll take the money and be sensible. It was very frustrating to watch it after, but then you don't want to be caught on the other side. And just to go back and talk about Paulson and the other cronies that Biden's having in his cabinet, this is what it means as far as a Democrat Biden government in America. This means that at least for the next 2 years, the US is set to descend into that circle of monetary hell reserved for nations which openly engage in helicopter money, and everybody knows what happens after. And that's what I was saying earlier. They're going to print like it's gone out of fashion as soon as they get in. I mean, just in between Christmas and New Year, 1.4 trillion was printed, $600 per person, I think. Well, not the 2,000 that I mentioned yesterday. So they're going to do that again. They said there was enough printed until September in between Christmas and New Year, but you wait. You're going to see one of the biggest stimulus packages that you've ever seen, because obviously they'll ramp the market down. Paulson, even though he's part of the environment, not the Treasury, he'll have a hand in it. Don't you worry about that one. So then the market just continued higher. If we just go back here, I was then looking at the fibs just to see where the market would march to, and then I started marking up the 78, which is the black line there. The market hits 78, it stops, it trades sideways, and then eventually it will move to the upside. The other black line I've just added to the chart is the 89. The market, once it broke with some increased selling, notice though how it traded sideways at that 78 in the daily chart. You wouldn't know why it was doing this unless you're looking at the daily chart as well. Prices go through the BRN there. We get a bit of selling coming into the market a bit more, and the market's waiting for the news of the count in Georgia. We get this biggish bar there trying to drive higher, and then the market trades up to the R2, which is the 89% from the daily chart. If I just come back, maybe it will show you. No. So what I've done is widen the chart. Then you can see how that 89 stopped the market as prices then got into a sideways move, again waiting for the news of the result from Georgia. And there you go, there's come back, and this is what I was doing. I was trying to find the news, and then eventually there's the 89 taken out. So once the 89 was taken out, I then put in the all-time high, which is the black line there, and we see prices trading up towards it, which they did later on in the session. They came back, and you'll see them trading up to that point there. And then, of course, the market stopping at that point as well. As you see, the volume coming in. So that was the all-time high. And then they went above this, which we have seen in the daily chart there, where prices moved higher. And, of course, as we just have a quick look, we can see the futures market is already moving prices to the upside. So no end to the madness. No end to the madness whatsoever at this time. Okay, I've gone on long enough and covered an awful lot. If you've got this far, well, thanks for watching. Really appreciate it. Huge amount of information to get packed into this one. So apologies if it's a bit fast-paced, but not a lot of choice to try and keep the time down. Okay, thanks for watching. See you in the next one.